Hey guys, welcome to another Trade Genius podcast. I got my good friend Bob Kudla here with me. And guys, we've seen this playbook before. They're doing it again right in front of everybody. We're going to show you the data. It's undeniable at this point, and you're going to want to know which way this market is headed because of it. Let's dive in.
Trade Genius.
Well, Bob, they say nothing new under the sun, and I'd have to say it's pretty much the truth.
Yeah, I think King Solomon has been reincarnated here as a Wall Street banker, but everything seems to be playing out. It's kind of scary, Phil, when the playbook is actually working.
Yep.
We have the market ripping. We have Bitcoin revisiting 100K here again. We're going to talk about that tomorrow. There's some really interesting things that go beyond the price that I think you guys should know about. We have, gold reigniting, and we have the bond market, the yield starting to fall, and it's setting up for the blow off top here. And then that blow off top requires suckers, because remember, for every buyer there's a seller, or for every seller they need a buyer. And let's show you some charts here. Let's show us who's buying and who's selling right now, Phil. So what's first on the buyers, right?
Insider buys.
Yeah. What are they doing? They're not buying any more of their stock right now, guys. And remember, if you wanted to know one chart and only one chart to ever own, that's a metric. This is the only one that you ever care about. When insiders are buying, you simply buy hand over fist. When insider buyers are far and few to be found. However, this next chart, we found them, and what they're doing, they're busy selling, Phil. And look at it, they're selling right into the top.
Yep.
Okay, these guys are known as smart money. Okay, these aren't your Twitter warriors or your ex-trolls out there telling you that, we're going to have 3 years of a new bull run because of Trump. These guys know their numbers and they know what's going on, and they're not selling. And the wildest thing about it, Phil, they're selling into a potential lower tax rate next year. That should be alarm bells. They're calculating that they have a potential to lose more money by waiting with a lower tax rate on their gains than they are if they just get rid of this stuff right now. But you know who the bag holder is. Remember, if you're at a poker table and you don't know who the sucker is, well, here's the sucker. Booming confidence in the stock market. Okay, the desktop warriors, the Twitter trolls, the ex-trolls, the people that just use metrics to extrapolate into the future. They're like, we're all in, baby. Part of it's Trump's fault, because I think he got people excited, and I don't blame them. But Main Street isn't Wall Street, and they're going to sell into this, Phil. And I think it's going to be brutal, absolutely brutal. The problem we have, like always, is you don't know when. The Citicorp CEO said, hey, you have to keep dancing until the music stops. And I know what he was saying here is like, I can't stop lending people money because a recession may come. He's saying I got to wait for basically the defaults to happen before he stops lending. The same thing's going to happen here. The sellers are going to overwhelm the buyers while the buyers are pushing in with leverage, Phil. And that's where bear markets come from. What do you think?
Yep. And until you get that catalyst that does kick off the effect of the dominoes falling and the prices on asset prices start to come down, you're going to have basically portfolio managers chasing each other, right? Because nobody wants to be like, well, why didn't you perform to the upside like these guys, right? And then at risk of losing your job. So it's okay to be wrong if everybody else is wrong. But if you're prematurely right and people are still making money and, maybe what you think is going to happen doesn't happen for another quarter or two, that doesn't really work in that world because it's so performance-based. So buying begets buying, essentially. I think we're seeing, especially like in Bitcoin too now, because you've got kind of game theory playing out. If you're not getting involved, you have to get off zero. Otherwise, these guys that have these corporate treasuries over time, and I'm not saying what like in the next 12 months, but over the years now, what's going to end up happening is that if your treasury is not backed by BTC, which has got the best, compound annual growth rate out of any asset we've seen in our lifetimes, people are going to be like, well, why didn't you convert, right? So things of that nature are going to be playing out now, microcosm here that's playing out in real time over the next few weeks as this market blows off, especially going into year end now, because you got rolling P&L from the first 3 quarters coming into the Q4, and no one wants to be sidelined going into this move up, especially with the textbook, what they call Santa rally, which is in the next couple of weeks going into the year end. So you could actually see a very explosive move on everything, crypto, stocks, you name it, straight up in the air into the end of the month. But you do make a good point. These guys are selling now. And it could be just that they don't want to time it, right? They just know that what that tells me is the next quarter numbers, or possibly some of these fourth quarter numbers, are really getting bad, and they don't want to time it. They're happy to get out, and they call that selling into the strength, right? And so they probably don't foresee much in the way of a tax break going into 2025 from their perspective, from their tax bracket, which is, these guys have many loopholes to get away with not paying their fair share of taxes. But unlike crypto, you might benefit you to wait till the 1st of January or the first week in January, because you don't know the pro crypto administration coming in. There might be huge tax benefits that get enacted starting 2025. So there is a big difference there, I think, in terms of when you would want to sell which asset. But yeah, I just think that now we got the chase for alpha, which is basically all of the institutional money. And what's interesting too, Bob, is that the volume is drying up. We don't have the volume charts here, but what we're finding out is they're settling a lot of these large transactions are happening in the dark pools, which don't necessarily show up on your volume charts. And that's because they're trying to hide the fact that they're selling into this. And so before, when you would see, shrinking volume, that would be more of a kind of an obvious indicator. But actually, that doesn't show us everything now with all the different ways that these trades settle. But there's an active push by the bigger participants to hide their transactions, to hide the fact that they are selling into this move.
Yeah, two things struck me today, Wednesday, is that usually don't, at least in my experience, people correct me if I'm wrong, but usually don't see violent moves on Wednesdays. We always call Wednesday Dull Wednesday, Theta Burn Day, and everything launched, stocks launched, and Bitcoin launched. The other thing that people don't realize is that a lot of these insider sellers could be replacing it with options too, so they don't miss the upside. So that's the other where you can get fooled too. It's called stock replacement strategy, where they got rid of most of their risk. And we talked about this earlier, maybe last week or earlier this week, is that, look, these guys are willing to take a 10% hit off the option and earn nothing on it, but they get to participate in all the upside, but they protected 90% of their run. Remember, these moves over the last, 2.5 years, a lot of these stocks are up over 100%. And, you want to lock this stuff down. And so you just got to be careful. Like, personally, what I'm doing, if people are interested, is I've been slowly scaling out of all my big risk. I've been day trading a lot more. It helps that, Bitcoin and MicroStrategy and Coinbase are just whipping around like lunatics. So it gives me a chance to, earn my daily bread here without taking any long-term risk. But I tend to be fully hedged going into the inauguration. I think TLT rising is an alarm bell people need to be paying attention to. And that also with oil, my biggest position I own is ExxonMobil. And I mean, they thought nothing of just cratering at 3% today. Nothing, just a blink on a mega cap. So when oil starts to roll over, it's going to be a big problem for the market in general, because there's a lot of stocks tied to that, and it's also a economic pain indicator. So if you have TLT rising, which it does when oil goes down, that's your recession trade. So pay attention to both those, and I think you'll get your answer as to what 2025 is going to look like. Is it going to be December high, January high, or March high? Those are the three Montes that we're dealing with right now. And guys, if you want to trade with us, go to tradelikeagenius.com. The response has been overwhelming. I think we're really helping to change people's lives. I know we're helping people change their portfolios. And we definitely could give you some really good insight and using really good tools to help you, not also in this mania that we're in right now. But as you can tell from our podcast, is that we're firmly placed in the ground here. We hold no illusions that tomorrow this thing can't start unwinding. And we have trades to help people manage through that. The hardest thing to trade is a bear market. I think we have tools to help you manage that and survive, and also even thrive in that environment. So check us out, tradelikeagenius.com. You can persuade Matt to give you the specials yet, but by Saturday I'm flipping them off, and you guys had your chance. So with that, thanks, Phil. Catch you guys later.
Trade Genius.